Welcome to the market updates. Today, we're going to look past all the daily noise and chatter. We are piecing together a potential playbook for what could happen around 2026, a strategy that connects the dots between a possible recession and what might be the next huge opportunity in tech, crypto, and even gold. So let's just dive right into that question. Is a recession a threat or is it an opportunity? The key, really, is to understand the potential domino effect. How a recession could force the Fed's hand and how that response, in turn, could create a predictable wave across all sorts of different assets. It's all about spotting the pattern before it happens. All right, first things first, let's get a feel for where the US market is sitting right now. It's kind of a mixed bag. And honestly, those mixed signals are exactly what we need to be paying attention to. So what are we actually seeing out there? Well, while the S&P 500 and the Dow are kind of treading water, the real action is over in the Nasdaq, which is being pushed higher by that incredible AI momentum. But, and this is a big but, if you look under the hood, the broader economy, things like employment data, is starting to flash some warning signs. It really suggests a slowdown might be just around the corner. Now, I know when you hear tech boom, it's easy to get flashbacks to the dot-com bubble, right? But what's happening with AI right now is fundamentally different. This isn't just hype. It's a real revolution built on a much, much stronger foundation. So here's the crucial difference. The dot-com era, that was fueled almost entirely by speculation. I mean, you had companies being valued in the billions based on promises, with zero sales or profits. Today's AI leaders, we're talking about the giants here, are making staggering amounts of actual, real-world profit. They're not just selling a dream, they're selling products that are creating massive efficiency gains for businesses right now. And this quote it absolutely nails what's happening. The biggest winners in this AI revolution aren't just the companies making the cool new apps. No, the real money is flowing to the companies providing the essential gear, the picks and shovels of the digital age. We're talking about the chips, the cloud infrastructure, the whole shebang. Okay, so keeping that whole economic picture in mind, let's pivot to the first key part of our playbook, precious metals. Because to really see the potential in gold and silver, we have to look at them in a totally different way. If you just pull up a standard price chart of gold, you're missing a huge piece of the puzzle. It's actually kind of misleading. Decades of inflation have eaten away at the value of the dollar, and that completely distorts what gold's historical performance and its future potential really looks like. So how do we fix that distorted picture? Well, we adjust for inflation. By using a measure of inflation, we can strip out all those effects over the years. It lets us see what past prices would actually be worth in today's dollars. Suddenly, you get a true apples-to-apples comparison. And when we do that, the results are, well, they're pretty incredible. Once you adjust for all that inflation, you see that gold's true historical high is way higher than you'd think. This analysis suggests that for gold just to get back to its real inflation-adjusted peak, it would need to climb to a target somewhere around $3,800 an ounce. But hold on, because gold might not even be the biggest story here. When we run that same inflation-adjusted analysis on silver, the picture is even more dramatic. It is trading so much further below its real all-time high. In fact, for silver, just to play catch-up, some models point to a potential upside of over 50%, with some long-term targets stretching all the way up towards $60 an ounce. So we've got a slowing economy, we have this super strong AI sector, and we have these potentially undervalued metals. How on earth do all these pieces fit together? Let's lay out the full scenario step by step. This is the heart of our potential 2026 playbook. Here's how this could all play out. First, the economy officially tips into a recession, which usually causes a broad sell-off pretty much everywhere. In response, the Federal Reserve almost always steps in with major stimulus. Think cutting interest rates, that sort of thing. Now, history shows us that the very first assets to react positively to that stimulus are gold and silver. Then, a few months down the road, as that stimulus money works its way through the system, capital starts to feel brave again. It rotates out of those safe havens and flows right back into growth assets like tech and crypto, kicking off their next big rally. Okay, so let's jump to that final stage of the rotation and see how the crypto market is setting up right now. From a technical standpoint, where are the big players at? Right now, the crypto market is kind of coiling up, getting ready for its next big move. Bitcoin is right up there, knocking on the door of a really critical resistance level. A breakout could be huge. Ethereum is playing it a little more cool, kind of neutral, waiting for a clearer signal before it flashes by. But what's really interesting is Ripple. It's already showing some relative strength, which suggests it could be one of the leaders on the next leg up. They're all getting positioned for that potential final stage of our playbook.
So, to wrap all this up, what are the most important things to take away from this whole explainer? Let's boil it all down to the essentials.
The most important thing to see here is that these aren't just separate random events. They're all potentially connected parts of a larger cycle. A slowing economy could trigger a Fed response, which history tells us would likely light a fire under precious metals first, before ultimately pouring fuel on the next big wave of growth in tech and crypto. Something to think about for sure. Thanks for joining us on the channel. Hey, if you got some value out of this today, a subscription and a like would be really appreciated.